Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about KILPEST and its results and how are the results, etc. We'll discuss about that. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that I'm not an official portfolio advisor. These all will be my personal opinion, and any buying selling decisions you take is purely on your own discretion. Kindly consult your financial advisor before taking any call. Whatever I'm discussing here is purely for educational purposes, and whatever I have learned over the last 10-12 years being a retail investors in this market, I'm discussing all that. So let's get things going. Let me take you to the screen of website. So let's discuss about KILPEST in detail. So KILPEST, a diagnostic company in the diagnostic space, and I made a number of videos on this. Earlier, I was invested in the stock. At the moment, I am not invested in the stock at all, and the results have been subdued. So a 300 crore market cap company that has that is currently trading at around 400 rupees at a PE of 13 is what it is trading at, which is slightly higher than what it used to trade at. So uh, that's about the stock. So if we look at it, let's just go to as to what the company does, and then we'll discuss about its results as well. Kilpes was earlier into crop protection, etc., and into that space of agriculture and agrochemicals. But they changed their business model about 8 7 8 years back, and they are now they have you can say gone into a tie-up or you can say a merger with 3B Black Bio. And 3B Black Biotech, which is the subsidiary of the company, 83% of consolidated revenues of Kilpes comes from 3B Black Bio. It is engaged in the design, development, and manufacturing, and you can say commercialization of PCR based molecular diagnostic kits, PCR enzymes, and PCR reagents that they produced. And crop protection and agricultural business is around 17% of their business. In terms of export, Kilpis exports accounted for around 26% of the overall revenue in FY22. The company received a lot of traction from Bangladesh for the export of pesticides, and 3B Black Biotech that we are talking about, the company participated in the Medlem Middle East 22, receiving a lot of traction from the Middle Eastern countries, especially Saudi Arabia, Iraq, Iran, along others. And export revenue was around 9% of the overall, you can say, revenue of 3B Black Bio. So 9% of the revenue from the kit business comes from abroad. Overall, 26% of the revenue from the crop protection business comes from abroad. But the problem here is that the 17% business of crop protection isn't yielding much, and that is eating into the consolidated numbers as well. Uh, Starting from FY14 to FY20, that is pre-COVID, this subsidiary, that is 3B Black Bio, has been growing at a rate of around 30-35% through new and existing test kits in the diagnostic segment. During the COVID era in FY22 and 22, company performed exceptionally well. During FY22, the COVID revenue accounted for 60% of the overall revenue for the subsidiary, and the company expects the growth rate to stabilize back at around 30-35% now post the pandemic. These are the test kits that they have come up with, and they have been US FDA approved. It is the first, you can say, company from India to get US FDA approval for this product. The company quickly scaled up production from 5,000 tests per kit to 1 lakh tests per day. And 3B Black Bio is one of the largest, you can say, suppliers of pandemic PCR kits, RT-PCR tests in India, having supplied over 15 million test kits in more than 400 labs across 80 cities in India. So, tremendous performance altogether. But the problem, what are the problem areas with the company? The problem areas is that the margins kept on decreasing. So, if you remember, in you can say April to June of 2020, the margins were nearly, it was huge, 3x, 4x kind of margins were there. And in last year, the margins had dipped to around 20-25% or so. I think around 30-35%. That's just about it. And so, over on an overall basis, the company has been doing margins of around 40 to 50%. So, if you look at the quarterly numbers altogether, the sales were around 18 crores this time around. This was March of 2023. They did around 18 crores versus I think around 18 crores. It was virtually at the same level, no growth whatsoever year on year. And these are the numbers that I look at. And in terms of margins, it was 32.2% last time around. It's around 41.2% this time around. So there has been a margin improvement. Uh, but the fact remains that overall the numbers doesn't look that good. So if you look at it, 7.6 crores of profit before tax last year in March versus 8.4 crores this time around. So a growth of around 10% year on year does not give a lot of confidence to someone like me. And eventually what has transpired is that the numbers are okay-ish. I won't say they are extraordinary, and they are something for which the stock will move up sharply, and eventually they produce 5 crores of net profit versus the last year's, you can say in March, of 4.8 crores. And remember, in the March quarter last year also, the pandemic was very less, so there were very less, you can say, test kits that were being sold in India compared to this year. Although it was greater than this year's March, but still they were not huge, and so the numbers ought to have increased, but they have not substantially. In terms of, you can say, in terms of yearly numbers, 62 crores of sales is decent enough with a margin of 47%. Eventual, you can say, net profit of 26 crores and an EPS of 30 rupees. So that's what they have come up with. So the final EPS for the company for FY23 has been around 30.2 rupees. The stock is trading at 410 rupees. It's trading at 13 and a half times, which is expensive. And I'll tell you why it is slightly stretched at the moment. If you look at the historical P/E ratio of the company on an overall basis, say even on a 3 year basis, even if I look at on a 3 year basis, the PE exploded during the pandemic, and so it's around 8 to 9, you can say, is where the historical PE remains. So I will not be surprised if it trades at around 10 times earnings, currently trading at 30 times. So I would not be surprised if the stock declines and gets to those levels of around 10 times earnings. But it will be interesting to see how the stock behaves. Again, the stock has not reacted well to the numbers, so that is also an indication. Uh, so on an overall basis, numbers need to improve. I think the top line need to improve. Normally, the top line growth has been around 30% year on year. Even if you look at, you can say, September numbers altogether, September 22 numbers, they were pretty decent compared to September 21. Now, what we need to look at is in FY24 how the numbers pan out, because that would be a clean year without the pandemic, and let's see how the numbers pan out. FY20 was the last, you can say, year when it was a clean year without looking at, you can say, the pandemic thing. And if we compare March 20 with March 23, numbers look pretty good. So in March of 2020, they did 6.7 crores of sales, with one, you can say, 1 crore of other income on a consolidated basis. And so overall sales were around 7.7 crores versus this time around it's being around 19.3 crores. So on that basis it looks fine, but you need to understand that in March 20 or March 19, sorry, February 2020 or January 2020, the stock was sitting at around 100 rupees, and today it is at 400 rupees. So the stock has also gone up sharply. The stock has also performed extremely well over the last 3 years, and so we cannot say that the valuations are much better now, because the stock has gone up 3x, the performance has gone up 2.5x. So it's all quite steady at the moment, but the margins look much better, 35.3% in March of 2020 versus 41.2% this time around. Even on a yearly basis, if we look at March 20, it was around 30 crores sales, and we had around a profit of 8 crores versus 26 crores this time around. Margins were 31%, this time around is 47%. Now the question remains, and they give very, in fact, virtually no interviews I have seen uh, on camera, but if whether these margins of 45-50% is sustainable or not. If these margins remain sustainable, then the stock has a chance of going up. Plus, there are other triggers that are coming up for the company. So, let me just go through the positives and negatives for the company, and then we'll discuss about the balance sheet part and etc. So, balance sheet is also one of the positives of the company. So, three positives for the company, which gives confidence for investors, are the triggers that are coming up. So, one is the merger between 3B Black Bio, amalgamation between 3B Black Bio and Kilpest, and so 3B Black Bio stocks would be listed, and that will be uh, value accretion for somebody who's invested into Kilpest, and that will be an unlocking of value for investors of Kilpest. That's one thing. Listing on the NSC is also a big positive that we are expecting over the next few months that could take place. It has taken a while already. It has been around 1.5 years since we have been talking about it. The company has been talking about it, but let's see going forward as to how things remain. But that would also be a huge positive. Third point in here is the business per se that is in Europe. Now, what they are doing in Europe is something special, and once that picks up with their facility in Manchester and the things there, I think numbers could scale up much higher if they start selling in Europe, because the margins are completely different to what the margins are. I'm expecting that the margins would be completely different than the margins they are doing in India. So I think the margin profile could even scale up from the current 45-47%. That would be a huge trigger. And the fourth point that I want to make here is the balance sheet, the cash on book. So currently, and the company tried to go ahead with some sort of acquisition, but they could not. So from around 25 crores of cash in March of 2020, it is currently holding around 160 crores of cash, and that is huge for a company that has a market cap of around I think 350 crores or so, 300 uh, it's around 300 crores. So 160 crores of cash. So basically the company is 140 crores altogether. So uh, that is my point, that if you take out this 164 crores, the company is currently is of 140 crore market cap, with sales of around 60-62 crores. So these are the positives. These are the 4-5 positives that I do see. Company gives dividend, decent dividend. In fact, in the pandemic year when they did extremely well in FY21, they gave out a fat dividend. It was a pretty decent dividend that they ended up paying at that point of time. So on an overall basis, the company looks fine, but they are not showing the mojo to reward retail investors, and it has taken a lot of time. I'm not questioning the management here, but it is slightly slow in terms of the performance on organic basis, say either listing on the NSC or doing other things like you can say amalgamation thing with the 3B Black Bio and other value unlocking things that they need to do. They need to put this cash into work, this 164 crores of cash into a process for the stock price to go up, because there is uh, no use of having such huge cash and you're not paying out huge dividend, and neither you are you can say expanding in terms of business as well. So hopefully down the years things could become better. Now, what are the drawbacks of you can say the company, or something to be wary of is the market cap. First of all, the liquidity is extremely less, so if anything goes bad even once, then the stock could go down 20-30% in no time. The stock has run up, so kindly do understand that. If you look at the stock price, uh, from around say in not even in June, if we see that from the period before the pandemic when it was trading at around 90 rupees, I'm not taking into account the fall that happened before the pandemic hit in Feb March. Even if you take that out, around 95, 97 rupees the stock was trading at, and we went all the way to 700, 750, and the stock has corrected from there. So stock has already become 7x, 7.5x, and then the decline took place. So that's one point. Second point in here is their agriculture business. So if you look at their standalone numbers, if you look at their standalone numbers, it does not give any confidence. And what the management once said about 2 years back is that they might look to sell the agri business and just concentrate on their RT-PCR business. But they have not done that. If you look at the numbers altogether on a standalone basis, then it doesn't give much confidence. If you look at it here from March 17, they had operating profit of 1 crore, 1.06 crores, 18 was 1.09. Then it dipped to 0.43 crores. Then the company went into losses, negative 0.24. It further exaggerated the losses to negative 1.2 crores. The losses kept on coming in, and even after the pandemic, when things are better, the crop business for many companies are doing better in this field. They are still producing operating losses on an operational basis. The company is producing losses, so this is a real pain. This is another reason, the second point, you can say the negative point for the company. Either they go ahead and sell this business and get along with their you can say medical business. That would be a big fillip. So there is a lot of risk attached by buying into this company from a long term point of view. uh, the third point I want to make here is that the growth has slowed down. Now, this has really irked investors, and that is why the stock is down from around 450, 470 earlier, say 2 months back, to 400. And if you look at the numbers closely, although margins have expanded, but if you look at even the consolidated numbers, on a year-on-year basis, the sales have been flat. And normally, even before the pandemic, they used to produce very decent numbers. So if you look at year-on-year numbers, before the pandemic, things were looking fine. So from around 21 crores in 2012, they did 29 crores in 20, and steadily they started to perform. The margins from 5% went up to 16%. So if you look at it here, 2012 the margins were 5%, then became 6%, then 7, then 9, then 16. This is before the pandemic. I'm talking about 23%, 31% in 19, and 32% in 2020. This is all before the pandemic. The company was starting to do well. At this point of time, I don't know whether the margins of around 45-50% will sustain. And if the margins dip to say around 30%, it comes back, they come back to 30%, then the valuations are not going to go up, because even with the margins at around 46-47%, the stock is trading at 13-14 times. It may dip to 11-12 times going forward, the way the stock is behaving. So no recommendation on my behalf. I won't say whether you buy or not from here on in on this channel. So no recommendation, but overall these are the 3-4 risks that I see in the business. There are 3-4 positives as well. You can take your own call whether to get into the stock or not, or what needs to be done in terms of shareholding pattern. And this is also a cause for concern that 38% is with the promoter. I would love to see 50-60% stake. Now, another thing that has happened is that over the last 3 years, the promoter, although the stock has went up, went down, has not gone ahead and bought a lot. See, it has remained stable from December 21 at 38.43 till today, March 23. For 1.5 years, the margins have remained stable. So that's the overall, you can say, understanding of the stock for me. kindly take your own call on whether to continue to hold the stock or exit or buy it afresh. So this was a video on KILPEST. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot.